Investors dumped big cap tech stocks yesterday. Apple was down more than 2%. Amazon, Netflix, and Facebook slid more than 3%. Tesla was off 6%. Join us to talk more about the tech wreck we saw yesterday. Greg Branch, managing partner at Veritas Financial, and Dan Flax, senior analyst at Neuberger Berman. And Greg, we've had some, let's see, there's false starts, and maybe there's also false stops. We've had a few of these with when interest rates move up, and we see it reflected immediately in big cap tech. One of these days, it's going to mean more than just a buying opportunity or a pullback. Do you get the feeling we're getting close to that day after what we saw yesterday and what's indicated this morning?
I don't think so, Joe.
No.
We have two things happening at once here, and we have to get through them until we get to what I think will be a very powerful earnings-driven back half. But as you rightly indicate, inflation is one of those things. The market took a sigh of relief on Friday on a weak jobs report, but then other interpretations of that job report started to emerge that we were probably supply constrained and not demand constrained. And as you rightly indicate, and as I've been talking about for weeks, as inflation rises and the threat of yields rising hits the market, that is going to have the largest impact on tech. But the other thing that we are dealing with right now in terms of tech and growth is that we are just starting to hit the period of the toughest compares. Remember, we really weren't forced to a stay-at-home and work-at-home situation in a meaningful way until the second quarter. And so we're starting to lap those very difficult compares at the same time that we're starting to emerge, and the market is questioning the strength of some of those trends and the persistence of some of those trends that those companies benefited from. And so the market's going to need to, or will wait and see if that strength is persistent as we emerge.
What do you, Dan, you have noted the sell-off in tech, and I don't know whether it's getting more frequent or, and sometimes sharp corrections are the best kind to maintain a bull run. Maybe that's part of it, but you see any worrying signs about the action that we're seeing in tech and the NASDAQ?
Joe, I think we'll have concerns clearly in the near term around growth and rising interest rates. What we look at is these longer-term secular trends around mobile, around cloud, really this build-out of the digital infrastructure. And so those trends, in my view, remain healthy. And so what's going to matter, in my opinion, is that the companies that are able to innovate and create value for their customers will ultimately create shareholder value. So if we look at a company like Google or Alphabet, core search is healthy, YouTube is strong, the Google Cloud platform aiming at enterprise customers remains very strong. Another name like NVIDIA, which has very attractive growth prospects around this secular trend of artificial intelligence. So you look at the data center or gaming, and maybe one other one I'll mention is a company which you probably know of, Qualcomm, which is obviously well positioned in the world of 5G and the Internet of Things, and there's obviously attractive growth prospects longer terms in areas like auto. So a lot to like despite near-term choppiness.
Greg, what about the value growth balance at this point? 51-49, 49-51, what, 50-50, 80-20? You got a preference?
I don't know if I can nail it down to an exact number, but here's what I would say. We are entering a period where we are seeing inflationary pressure. We're seeing significant inflationary pressure. And as I think Secretary Yellen, intentional or not, started to signal last week, is that they're certainly considering a change in posture. And so it is worth looking at companies that benefit from higher yields, from higher interest rates, that companies that benefit from higher inflation. So a lot of these commodities companies, a lot of companies like DuPont that can pass on pricing to their end customers. Lots of companies in the value retail space. But I don't know if there's an exact formula, Joe, because I do believe across the board estimates are light in the back half. And I think when we emerge from this period of concern over inflation and what the Fed will do and signal, we'll get to that back half performance story.
Shepard Smith here. Thanks for watching CNBC on YouTube.